welcome back. It's time for Personal Finance. So let's welcome Hemant Rustagi of Wiseinvest Advisors to be our expert this afternoon. Hi Hemant, good afternoon. We have a first query with us already. Sachin Pandit has written to us from Mumbai. He says he can invest 5,000 rupees per month. He wants to know which are the funds with tax-saving benefits. So one thing, it's good to know that somebody is looking at their tax planning so early on in the financial year. But what's the advice that you can give him?
Well, I think it's a good option to invest in ELSS funds. I mean, if you really compare the investment options that are available for investor to save tax under ATC, I would rate ELSS very high on two counts. One, you know, the lock-in period is only 3 years, which is much shorter than most of the other options which are there under this section. And the second is in terms of potential. I think ELSS schemes have the potential to provide much higher returns than other options. Of course, being equity-oriented fund, there is bound to be volatility from time to time. So it's very important that, you know, one, invest for long term. The second is that if you invest through SIP, I think you benefit from averaging. So a couple of funds that can be considered in this category. One is Axis Long-Term Equity Fund, and the other fund is Reliance Tax Saver. So these two funds have been performing pretty consistently, so he can definitely consider these two for investment.
All right, Sachin, hope that works for you. Up next, Rajiv Sharma has written to us from Bangalore. He says he wants to invest 2 lakh rupees in mutual funds for the long term, which he has quantified as 3 years because he's looking to start a new business venture at the end of this period. So he wants to know which are the funds that he should be looking to put his money in. Now, Hemant, one thing is that his goal is just about 3 years away. So he's not in a position to take a lot of risk right now. So given the way the markets are, what would you advise him?
So I think there are two important factors to be considered here. One is the time horizon is 3 years. Second is the objective. The investment objective is to create a corpus, basically, so that can be used for starting a new business. It's very evident that he's not in a position to take too much of risk, considering the objective is to create a corpus for the business. But at the same time, while looking at safety, I think it will be prudent for him to look at investment options which can give him higher return than what he can get from traditional options like FDs, and also the returns have to be tax efficient. So my recommendation would be that he should look at hybrid funds offered by the mutual funds, especially those that invest in a mix of equity, arbitrage, and debt. There are few funds available where the exposure to equity is restricted to maybe 20 to 35%, and the rest of it is invested in arbitrage and debt in a manner that a combination of arbitrage and equity is more than 65%, which makes them equity-oriented fund for tax purposes, which means any gain that he makes after 12 months is going to be tax-free. So two funds he can consider for investment. One is a Kotak Equity Saving Fund. This fund invests around 20% in equity. The other one is ICICI Balance Advantage, which has around 30 to 35% in equity. He can invest 50% in these two funds, and as I mentioned, if he can keep it for 3 years, he can expect to get double-digit return from these funds.
Thanks so much for joining in.